All right, hey guys, at 10 p.m. Futures are doing their thing, bouncing, never letting shorts out. I'm going to go back to the put call ratio indicators. And we know what price is doing, basically straight gamma melt, gamma grind up. We actually did get a crossover. I mentioned a long time ago as we looked at a scenario kind of like this or even further back like December of 2019, I mentioned that for us to reverse, um, we need basically all four of these indicators. So it's a white line here. It's this sort of histogram here, this white line, this line. We all need them to cross a red line at the same time. And you can see basically, with the exception, this was a 3 out of 4 sell signal, but you can see 3 out of 4, these three here crossed. Here we got a 4 out of 4 to start the whole market, the whole bear market. We got a 4 out of 4 in February 2020. We've got sell signals going all the way back to the beginning of time. Anyway, so this is what I'm telling you: do not get overly bearish. Do not get overly excited about shorting anything until we are setting up a cross of all four, and they can cross from the top or the bottom, but until all four cross at the same time. And to do that, we need basically this is a put call and put call ratio. We need this to go up. Essentially, you can kind of see, let me go back here, there's an instance of it there. We need to go up when prices go up. And that creates a bit of a divergence. So you can start to see here, in like beginning of this bear market, this started to curl up as the market was finishing its top. And then we get what's called selling confirmation. So we need all four of these to cross, and then we need a selling confirmation. Otherwise, it means nothing. Okay. So in the meantime, we do have, we printed a higher low. So July 11th was our low so far. Today was a little bit above that. But if tomorrow we open up and go euphoric and we have a melt up and we print a new lower low on the put call ratio, it means nothing, right? So we need to see this continue to curl up and prices to stagnate. And we're finishing up OPEX this week, and it's very possible, but we still have a long way to go. This one needs to come up, which means it needs selling, or it needs to come down, which means it needs calls, right? And this one has a long way to come up. And you can see it takes time, in this February 23 top, if you want to call it that, like it takes time, and you'll start to see all of these indicators reverse as price stagnates or makes new highs, right? So as of now, we have nothing here that says get out, get short, right? Getting short, you're probably going to get run over. In fact, if I go back to probably the closest thing that we have, and really the setup is not that dissimilar. We had this you could call it a round bottom here in September of 2021, and we sort of had the same round bottom in February. A little bit different trajectory, but this move is very similar to what we saw here, at least in terms of these indicators. This one here, especially, we don't have a cross. Blue crosses above orange, and maybe we can look at selling on the short term. But if we go back further, again, we're very similar to what we saw here in December of 2019, and I want you to study that period, right? Like the indicators are almost the exact same. We did get a massive sell, but December, January, end of February, right? We got a little bit here and everybody capitulated and panicked and went short, and then they just killed them again. And then finally, when everybody was loading the boat long, that's when they dropped it. That's when they dropped the hammer. And it's very similar in other cases. Let's see. We're not that dissimilar. As long as the readings are down here, it says that yes, there is euphoria, and yes, there is sufficient reason to sort of drop the hammer. But the best that we're going to get is something like we saw here. This is June of 2020, right? You can see we sort of melted up, and then we dropped right back, basically to retest it. Maybe 4,400, 4,230. This is SPX, by the way, right? And so let's see, that topped out on June of 2020, and we were, a month later, we were back to that high. So that was a month, but we basically had a couple days selling event, chop double bottom, right? Like unless you caught this perfectly, and even then, we had remnants of a sell signal. You can see as we got, well, let me just look here. We were hovering around the red line here. We were hovering around the red line. So even that case, we had more put activity. We had a better setup. So what I'm saying is, you can see coming out of 2020 bottom, slow grind. It just, this is just a tractor beam, right? And you did have selling throughout this period, and we did have some sell signals that manifested some good profits. But even then, like, You tried to short in September, and that was a tricky one. I remember trading through that. That was difficult. I think I owned some VIX at the time. November was very similar to sort of this. It was like a magnified version of this January 2020. But anyway, you get the idea. What I'm saying is, the market this was March of 2020, and we didn't top until December of 21, right? So that's like 18 months, and we bottomed here in October. So we're not even a year into this. And if you look at some of the models I've shown you, like we could get to SPX 4,800, 5K before we actually see any real selling. If you go back to the level plan that I've shared before, we know what levels we can face some resistance, and we're doing a liquidity fill here. So I wouldn't be surprised if we retrace a little bit. I mean, we are extended, and there's some divergence that needs to be repaired, but 4,200s, maybe it could be all we get, and that's if we're lucky. So anyway, there is a chance, like I said, this June 2020, where we're floating down here in euphoric, but you can see that even then, it double bottom, but it set a lower low. Like we might even need to go higher. I hate to say it, but especially if we break out of this like 4650 area, and people start buying for all-time highs, things can get out of hand. So we are euphoric. If I go back, we are very extended. We're the most extended we've been since probably August of 2022. But then we saw some selling, and that gave us what was the eventual sell signal. So until we start to see this curl back up, until we start to see those signals, I really think you're just going to expect more of sort of this gamma tractor beam, where it just chopped all the way up. It kept making you think. I remember trading this too. It kept making you think any minute it was going to drop, we're going to retest the lows, and we never did. We just kept going and going and going. So look at let's see. So it's very similar to what we saw here at the March 2020 bottom. Very similar to what we saw here at the Volmageddon, February, March of 2018. I'm trying to look, we had some flatness here in 2015, 2016, but it's not even, it just doesn't resemble that. So for me, I want to see these indicators curl back up. Until then, it's just buy dips. And, we could get some selling, and that could manifest a sell signal. And we say, hey, now it's time to lean into shorting the rips and buying some VIX and buying some puts maybe. But for now, all we do is we wait. Okay, it's euphoric. Does that mean get short? No, it means calm down on your longs. It means stop buying stuff maybe. It means trim some profits, raise your stops, and be ready for the dip, and give the dip time. It could be a case where we just chop around for a week or two, right? And it could be a quick flush, but we're going to watch for capitulation. And when we get capitulation, very similar to what we saw at the end of May, where we got a V and we saw capitulation. And I remember saying it, like, that's capitulation. You buy that dip and then up we go. So what I'm saying is, don't short unless we get a sell signal. Even if we're euphoric, that doesn't mean get short. It just means be careful, trim your longs, trim your exposure, maybe even hedge, but there's no reason to short. Be careful of a melt up. Our models call for like SPX 8K to 10K. Like the best that we can hope for is a retest of some of these levels. But even if you look at those models, we may not get them. We may not get them for, who knows? Like our New York Stock Exchange model calls for like, a steady climb up until the 2030s when we redo the .com bubble. So just be careful. We're in a buy the dip mode. It's annoying. It sucks. I hate grinding higher. I hate this like panic buying, but it is what it is. So we're gonna look for singles. And I know some of you are doing a really good job with that. So let's keep it up. Let me know if you have any questions.